Hey guys, my name's Evan. This is Sense or Sense, and I come to you today wanting to talk to you about how I've been making roughly $1,000 a month for many months now. And the way I'm doing that is I'm selling cash secured puts and I'm selling covered calls if I need to. So what I'm doing is I'm effectively finding a few ETFs that I'm looking at and I'm studying regularly that I want to own in the long term. So this is a strategy that is basically for those ETFs that you want to own anyway. And in my case, I want to own two in particular, and a third maybe so. I've been experimenting with it, but ultimately the two that I want to own in the long term are IWM, which is the Russell 2000, and TLT, which is the 20-year bond fund. These funds are, I think, given the interest rate environment that we have, where interest rates are likely going to be going down and not up any further in the next year or so, I think that they're going to appreciate in value. Small cap stocks tend to do well when interest rates start to decline, and obviously long-term bonds do much better when interest rates are coming down. So I want to own these both in the long term. So the way that I'm profiting on this now is I'm essentially going out there and selling puts on IWM and selling puts on TLT. Those are the two ticker symbols. And what I'm doing is both of them have daily or 1 or 2, maybe 3 days max out on options available, and I am looking for a fairly risk-free, let's just say that, risk-free trade, in the sense that I'm not looking to take a lot of risk. So what I'm doing is I'm looking for an 85 or 90% chance of winning, and that means that it's a 10 or 15 delta at max. The depth of delta and a lot of the other things that are discussed in this video are for a more detailed description later on, a detailed video later on. I wanted to give you my strategy on what I'm doing recently to make the roughly $1,000 a month off my portfolio. And so what I'm doing is, for example, I'm going out there and I'm selling a cash secured put on IWM, and I'm looking for the delta between 10 and 15, and I'm selling it for either the next day or the day after. IWM has pretty much daily options at this point, and I'm trying to collect premium on that option that will make me roughly $25 to $30 per day to get me to that $1,000 goal. $25 to $30 has been able to do it so far as I'm able to take reasonable amounts of risk and still sell those those cash secured puts. And then if I happen to get assigned on those cash secured puts, then I'm writing covered calls on those actual ETFs if they get put into my account. Essentially, they're assigned into my account. So I've had a few assignments in the last month, mainly on TLT, and if I get assigned, then I'm immediately writing a covered call at a 10 to 15 delta again, collecting a little bit of premium, and if just holding on to that position until it either gets called away from me or just keep writing covered calls on that position. And this has been working well for me the last several months. And I've done this strategy many times in the past, and it's very consistent as long as you take that little bit of risk around the 10 to 15 delta. I've found that that's kind of the sweet spot. Now, there is something else I want to share with you guys. The way that I get into these positions is such that I only sell cash secured puts on days in which the markets are down, or at least the individual securities are down, preferably the markets and the individual securities. So for instance, I'm only going to sell a cash secured put on IWM if it's down 0.25% in that day. Preferably it's down, a half to maybe 1% on that day, so I can collect more premium on that because the other side of the market thinks it's a bit more risky. And that the same goes for TLT. I'm only selling cash secured puts when TLT is down 1/4 to maybe 1/2 or more percent in the given day. I'm not selling cash secured puts on days in which the securities are up. And The same goes with covered calls. If I have TLT in my account or IWM in my account, then I'm only selling the covered calls on those positions on the days in which those positions are up by 1/4% or more. And by doing so, you're going to collect more premium, you're going to reduce the amount of risk that you have. And overall, I've just found that that works really well for my risk tolerance and to make me that roughly $1,000 a month. You know, in some months I'll make $800, some months I'll make $1,100, $1,200. What I mean by around $1,000 is it averages out to be about that much. And so this is one of the best ways that I know how to do it with very little risk. You combine that with one of my other strategies, which is several brokerage companies will now allow you to double dip with regards to having your money in their money market accounts and collecting basically a return on those money market accounts at the same time that you're able to sell these cash secured puts and make additional income. And that's that video. I'll leave a link in the description below, and you can go and watch that video as well to learn more about that. But today I wanted to bring you the specific ETFs that I've been selling recently and collecting money on cash secured puts, and then the fact that I was writing covered calls when I got assigned in certain circumstances. And I hope that this helps you bring some additional revenue to your accounts as well. If you found this video interesting and you like it, please leave a comment below. Make sure you smash the like button and turn the notification bell on. And I appreciate all you guys as being viewers. Thank you. See you next time.